0.5% higher on Shriram Finance. Ronak Honkar is with us of PPFAS Mutual Fund. Ronak, good to have you with us here. Good afternoon. Thanks for your time. You know, just start with your thoughts, Ronak, on HDFC Bank. I was reading a note from Suresh Ganpati of Macquarie, and he began his note by saying that I spend half my time nowadays discussing HDFC Bank with clients, and it's very heated. Used to be a one-way view, not anymore. It's a large portion of your portfolio. Talk to us about, you know, why you hold the... we know why you'd bet on the name, but just, the doubts that people are having and your justification to that with regards to HDFC Bank. Go on.
Thank you, Prashant, for inviting me. HDFC Bank does have these polar views nowadays. But interestingly, if you see, as the group has now merged, a lot of the things which HDFC Limited could do, the bank cannot do. So some of the overhang of that will definitely be there. A lot of the statutory limits that they have to maintain in terms of deposits and reserves, they will have to shore up those over a period of time. And that will happen as the business continues to go. The other thing that is positive for the group is that the reach of HDFC Bank is far greater than what the Limited could do. So some of the business which otherwise couldn't have been approached through Limited, the holding companies, now can be done very easily through HDFC Bank. And they're also expanding their reach, trying to reach out new customers. Again, if you look at private sector banks as a whole, these are very good consumer franchises. They will have fee-based incomes as well as the lending business that they run. I think we cannot discount short-term perturbs in the market right now, but we have to keep a watch as to how the business performs, how the growth comes in. That's the biggest question right now. Where will the growth come from?
Ronak, Bajaj Finance doesn't make it to one of your big holdings. Most of the fund managers that we speak to include Bajaj Finance in their portfolio. Can you tell us why you've kept away from Bajaj Finance? And would you now consider looking at it? They have got some fundraising plans. So any thoughts on that?
We are actually exposed to the Bajaj financial subsidiaries through the holding companies. So we own Bajaj Holdings as a large part of the FlexiCap and tax saver funds. And we own a little bit of Maharashtra Scooters as well. So we decided to buy the holding companies, which will give us the underlying for a discount.
Okay, all right. Hi, Ronak. Ronak, I as well had put out a piece on this Bajaj Holding and Maharashtra Scooters. Indirect way of playing the Bajaj twins. What do you think is, is a decent discount to give these companies? Because there as well, you have the street that's totally split out there.
Yeah, there's a very wide range, Nigel. So the discount has ranged from 70% is now close to 50%, and it keeps fluctuating. There is no fixed answer to that. If you look at global holding companies, the discount is as narrow as 1%, 2% in many cases. It's just an anomaly of our market where discount numbers can vary quite widely and opinions can also vary widely.
Okay, all right. Ronak, I think, as of the last reported number, you're sitting on cash, is approximately what? 12, 13%?
13, 14%. Yeah, 13.5%.
No plans to deploy it? You'll want to sit on cash? Do you think that with the kind of headwinds that we have and post the recent run-up, cash could be a position as well?
So we hold cash as a residual value. So tomorrow, if we like a good company which can easily absorb, say, 5% of the fund, the cash levels will go down. So the cash itself becomes a residual value. It creates an optionality for us to deploy when valuations are attractive. But at the moment, we aren't finding very attractive valuations in companies we like. So we sit on the sideline, we keep tracking them, we study these businesses. And the moment when these valuations seem attractive, the cash is available to deploy. But we are not in a hurry to deploy money and just chase the momentum that is there right now.
Okay, not in a hurry to chase momentum. Ronak, hi, good afternoon. I was looking through the holdings in the FlexiCap fund, and a couple of interesting PSU names crop up, but I'm sure they've worked very well for your portfolio. There's Power Grid, there's Coal India, there's also NMDC. So just tell us what you're thinking right now, because this is, I think, one of the biggest burning debates in the market. There's a small section of people who are beginning to say that PSU rally has run way ahead of itself, and these stocks will also start correcting, perhaps soon enough. What do you think, given that you're an owner of some of these companies?
Thanks, Urbi. No outlook on the price as such. We don't know when the prices will correct or go up. But interestingly, in some of the PSUs, which are very well managed, they have some resource advantage, they have some uniqueness to their structure, and some of them are also managed very well. So we try and filter these kind of PSUs. The three you mentioned, Coal India, Power Grid, and NMDC. NMDC was a special situation regarding the steel plant being demerged. But in Coal India, there is a long-term tailwind of thermal power in our country, which is needed. And I think that is one of the sole suppliers for thermal power in our country. So it remains to benefit as they become more efficient. It can also generate higher profits over a period of time. But again, it's not a company where you can compound consistently over a long period of time. It will have its own cyclical elements to it. And we have to understand those cyclical elements also before we pay for these companies. And with Power Grid, the same story applies. It's basically, it gets paid on availability of power. So as long as we have demand, as long as the grid keeps expanding, it makes sense to have a company like Power Grid expand its grid and also revenues over a period of time. These may sound very simplistic, but we actually paid, I think, reasonable valuations when we are buying them. So we may not be buyers at any price. We were buyers at a very reasonable price in the past.
Yeah, I know. That's why your shareholders would be, or rather your investors would be extremely happy with the returns that have been generated. Since we're discussing power and you sound quite convinced about the theme, would you look at adding positions? And if yes, and in which part of the chain? I mean, look at what's happening to some of the companies that are into smart meters. Right, we've seen those stocks completely burst through the roof, literally. Then there's green transition. So how would you play power beyond some of the names that you already own? You also have IEX, by the way, which has a certain regulatory overhang as well. We don't know if it will remain the advantageous sole power exchange of the country or not. That's a separate matter. But what else in power?
You would love to own simple businesses. What is resources? Then something which has some sort of a market dynamics or something that has a network effect attached to it. Some of these we already own. So beyond that, all these can be narratives. We have to track all these narratives carefully and see how the numbers actually come up in the future. And if at all in the future the numbers are sustainable and the business models also prove themselves, then we might look at these companies. It can mean industrial goods, it can mean smart meters. All these companies are worth tracking over a period of time. But I think when the narrative is too positive, it's better to just make sure that the valuations don't go ahead of themselves.
Hard assets, simple businesses. Ronak, did you give a look to JSW infrastructure? It's not every day that a port company comes to the market, and this is a large one, the second largest in the country. Any thoughts?
I don't have a view on that, although we track ports and logistics as a whole, but don't have a meaningful view on this right now.
Okay. Do you own anything in that space?
No, we don't.
Okay. All right. Fair enough. Anything else, Ronak, in terms of single stock, idiosyncratic kind of opportunities? Anything you bought recently? I know you're sitting on a large, not a large, but a substantial amount of cash. But have you done anything?
So no new additions in the portfolio as such. We have been buying wherever valuations are reasonable in the stocks we already like and already own. So that's the portfolio over a period of time. Anyway, we don't churn the portfolio a lot. So you won't find too many new names coming in, going out. But our views are more or less the same over a period of time. Find reasonable price companies which we like over a long term.
So more banks and more IT. That's the...
We do own IT in the portfolio, substantial bits of IT in the portfolio, both in FlexiCap and TaxSaver. And that remains a very interesting yet cyclical business over a long period of time, has generated consistent returns, is debt-free, has managed to have cash flow positive businesses over long decades period of time. I think we love that business, but over there we are very picky when it comes to large cap IT companies. We used to own some mid caps in the past, but valuations have caught up quite a bit in the mid cap and other smaller space in IT. The larger companies do have some reasonable valuations right now. But yeah, even there, the valuations have caught up since the last year or so. So it remains to be seen where we can deploy in IT services as well going ahead.
Got it. All right. Thanks a lot, Ronak, for stopping by and filling us in with your take on the markets. You're sitting on some cash as well, in no hurry to deploy, and you're keeping the faith with HDFC Bank. And some of those, so-called anti-ESG themes actually have moved very, very well. Coal India, ITC, people were scared. You all got in at the right time, and it's done well for your portfolio as well.